Today, we will talk about the last part of the auto insurance policy, the Part 3, personal auto policy, the physical damages, duties after accident, and endorsements. So as we talked before, there are 6 parts in the normal personal auto policy. It is Part A, liability, Part B, medical payments, Part C, uninsured, Part D, damage to your vehicle, Part E, insurance duties following an accident or any losses, and Part F, general provisions. Now, by law, if you want to drive, you need to get an insurance, and that insurance only need to cover the Part A liability coverage. Sometimes it also include Part D, the medical payments, the personal injury protection part. However, if you want to cover your vehicle, you might want to have the Part D coverage, the damage to your auto. So here's a question. If you hurt another driver in an auto accident and you're found liable for his medical expense, which part does it come from? Well, this part would be the liability coverage. However, if you damage someone else's car in an auto accident and you found to be liable, which part of the coverage would cover his damage of his car? Well, it actually does not come from your Part D, but it comes from your Part A, liability coverage, because you have been found liable for his loss, someone else's loss. However, Part D only covers your loss, the damage to your auto. Part D includes the following elements, and it covers 4 kinds of physical damage. First, there's a comprehensive coverage. Sometimes it's also called the other than collision, OTC. In insurance, we don't actually like the word comprehensive because it is actually not comprehensive coverage, since it only pays for losses that is not due to any collision damage or overturn. On the other hand, there is a collision damage that covers the loss to a covered auto or its equipment by collision with another object or by overturn. So if you have a collision with someone else, obviously it will come from your collision coverage. But if something else hit you, not during the time when you're driving, for example, if a tree fell onto your car and damaged your car, it will come from your comprehensive coverage, your other than collision coverage, your OTC coverage. So here's a question. What if you are driving and all of a sudden there's a deer running out and you hit the deer, so you damage a part of your car? That kind of damage, would the payment come from the collision or from the comprehensive other than collision damage? It seems to be that it should come from a collision because it is a collision with a deer. However, in insurance, it is covered under the other than collision. Why is that the case? Because the comprehensive or the OTC coverage cover anything that is not likely to be your fault, such as a tree fall on your car. It's not due to your driving. However, when you hit a deer, it is highly unexpected. You're not expecting to hit a deer. So the hitting of a deer, even though it's a collision, it is still getting paid under the other than collision damage. And if you have a collision claim from your insurance, most likely your insurance rate would go up because now you seem to be a very uncareful driver. But if you have a comprehensive coverage claim to your insurance company, more than likely it's not going to increase your rate because it's something that is out of your control. Other than those, there is a specific cause of loss which is provided under a named peril coverage and a tolling coverage. It provides the coverage for tolling and labor performed at a place of disablement. Under insurance, there's a deductible. Now, we did not see the deductible section in the previous part, Part A, the liability coverage, the medical payments, the uninsured motorist coverage. However, there is a deductible for the damage of your auto. Why is that so? Well, in insurance, liability coverage usually does not come with a deductible, so the loss would be paid from the first dollar amount. However, for the damage of your auto, deductible will be there so that the insured is also sharing a part of the loss so that he can be more careful while driving. The collision coverage, the losses are paid regardless of fault. So if you are at fault, the insurance company would pay for the damage of your car minus the deductible. If another car is at fault, you could either collect from your own insurance company or the other insurance company. If you have involved more than one vehicle in one collision, then the highest deductible will apply. What does that mean? For example, you own 3 cars. All of them are covered under the same personal auto policy, and you somehow collide 2 of your cars while driving the 3rd car. Suppose your personal auto policy includes a $250 collision deductible on 2 of the cars and a $500 on the other car. So you have 2 $250 collision deductible and one $500 deductible for one car. Now, without this provision, the applicable deductible will be together $1,000 when you add up the 3 deductibles together. However, with this provision, you will only need to pay the highest deductible, the $500. So you get paid for any exceeding loss exceeding the $500. The collision coverage will cover any colliding with another car, overturning after the driver loses control, hitting a tree, and damage when a passenger in a parked car opens a car door. Now, as we said before, hitting a deer would be considered as other than collision. However, hitting a tree is a collision. It is quite obvious because the tree does not move, so it won't be considered as unexpected that the tree show up, and therefore hitting a tree would be considered as collision damage. The other than collision covers the losses due to the following reasons. So the OTC is actually not limited to these perils. Basically, any direct and accidental loss that is not due to a collision and is not specifically excluded should be covered. As we mentioned in the previous chapter, if you are in a vacation and you have a rental car, that rental car will be considered as your non-owned autos. And because you're only driving it occasionally, and therefore that auto will be covered under your PAP. And if your regular personal auto policy has a Part D, the damage of the vehicle, the rental car would also be covered. However, the word occasional would be very important. If you have a non-owned auto, but you always use it, it would then not be considered as occasional use. One example would be, you may be carpooling with your friend to go to work every day. So you are driving his car all the time. In this case, it would not be considered as occasional use. And therefore, if you drive his car and have an auto accident, your own auto policy would not cover that loss. Now, what if you're in a vacation? So your rental car would be covered under your regular auto insurance, right? But what if you have more than one auto and covered under more than one policy? Which one will apply? Well, the broadest one would apply. So for example, you have two vehicles covered under two separate personal auto policies. One of them has the Part D. One of them does not have the Part D. Which one would it apply? Well, it will apply to the one with Part D, the broadest coverage. As we said before, there's a deductible section under the Part D. Why would insurance company require deductibles? Well, the major reason is to encourage the insureds to be more careful because they're also sharing a part of the loss. The other two reasons would be to reduce small claims. So if you only suffer from $100 of loss, you may not want to bother to get insurance payment. And also, it helps to hold down the premiums. The Part D also has coverage for the transportation expense. Now, what does that mean? For example, you need a car to go to work every day. If your car is damaged in a collision or other than collision, you cannot use your car during the time. You need a rental car to go back and forth to work, or you need to take a public transportation to go to work. In those cases, those transportation expenses will be covered under your Part D, the coverage for your damage to your auto. How much would be paid? Up to $20 per day, or to a maximum of $600 for each covered losses. For this kind of payment, there's no deductible, no monetary deductible. However, there is a time deductible, which we call it a waiting period. So for example, if your car is being repaired for 7 days, the first 24 hours will not be covered if it is a result of a collision. And therefore, insurance company only pay for 6 days, and that would be up to $120 in total. If it is other than collision, including a theft of your vehicle, then 48 hours of total theft loss would be applied. So if you have lost your car and you don't know where it has gone, so it would be a total theft loss. In this case, you're gonna have to wait for 2 days before getting paid by the insurance company. Now, as we said before, your rental car also enjoy your transportation expenses. So if you damage the rental car company's car, the rental car company will suffer from a business income loss because they would not have the vehicle to rent out. How much do you think they have lost per day? Most likely more than $20 per day. And that is why sometimes it is also a good idea to cover the rental car under a separate policy, because if there is any loss to the rental car, if it is being fixed, then your policy, your own vehicle's policy, would not have enough coverage to cover the loss of business income of the rental car company. So a non-owned rental car is also subject to the transportation expense limit when the car's owner claims a loss of the income. There will be several exclusions under the Part D, coverage for damage to your auto. First, there's always a public or livery conveyance. So if you're using your car as a taxi or a bus, you don't get paid for the physical damage of your car under your personal auto policy. And the radioactive and wall is pretty much not covered everywhere because the consequence would be a huge loss. Non-owned auto used in garage business. If you run a car repair business and damage your customer's car in a road test, it won't be covered. However, if you road testing your family member's car, it will be covered. You need to know that who will be considered as your family member. You need to live at the same address, and your family member's name would also need to be listed under the policy. Trailer, camper body, or motorhome. So if you want them to be covered, it's fine, but they need to be included in endorsements. Wear and tear, freezing breakdown, and road damage to the tires would not be paid, so that it eliminates the coverage for losses that either occur inevitably or can often be prevented by regular maintenance. However, it does not apply if the damage results from a total theft of a covered auto or a non-owned auto. So for example, if the tires on your covered auto are damaged beyond repair because you strike a pothole, the cost of the replacing of the tire would not be covered. However, if a thief damaged the car and damaged the tire by driving the wrong ways across the spikes in the parking lot, the tire loss would be covered because it's a result of a car theft. Customizing equipment. If the equipment does not come with the vehicle, it will not be covered. For example, the cab of a pickup truck would be covered if it comes as a part of the vehicle. However, a minibar that you installed would not be covered. Government destruction and confiscation. Any government-related action is pretty much not covered anywhere. Radar and laser detection equipment are not covered because these devices promote unsafe driving, so the loss of these equipments are not covered. Electronic equipment. It includes radios and stereos, CDs, and GPS. They would not be covered unless they are coming as a part of your covered auto. So if it is a factory installed electronic devices, it would be covered. Other than that, it would not be covered. And the reason being, it's easy to be removed. The rental vehicles. The personal auto policy would not pay for any losses to or losses of use of a rental vehicle if the rental agreement includes a damage waiver, which basically says your insurance company would not pay for that, but the rental car's insurance company would pay for that. Media and accessories. For example, if the theft of the videotapes or computer software from an insurance card is not covered, even if the card is locked, the insurance company will pay up to the limit of liability. Normally, there is not going to be a dollar amount of value of your car listed in the insurance policy. It's because of the wear and tear of your car. And normally it is paid under the actual cash value of the damaged or stolen property. The actual cash value would then be the cost to replace the property with new property of like kind and quality, less any depreciation. The insurance company will have the option to pay in money or to repair or to replace. And the insurance company also has the right to keep all the parts of the auto when repairing or replacing it. In addition, the payment of loss will include sales tax. If you are parking your car at a paid parking lot, a bailment scenario has been created. So you're the bailor and the parking lot is the bailee. By definition, the parking lot will have the responsibility to take care of your car, and the policy would not benefit the bailee, the parking lot. So if your auto was damaged at the paid parking lot due to their employees' negligence, your personal auto policy, Part D, will pay for your loss. However, your insurance company will preserve the right to recover from the parking lot, and this right we will call it subrogation. Finally, there's always a way to appraise. If the method of resolving the dispute between the insurance company and the insured over the amount on the covered loss cannot be settled, each party can choose an appraiser, and the two appraisers together will select an umpire. So if the appraisers cannot agree on the payment, the difference will be submitted to the umpire. Then a decision by any two of the three will be binding. After that, each party will share equal the expense of the appraiser and the umpire. The next part, Part E, would be the duties after an accident or loss. So there are certain duties you need to do after an accident before you can get paid from the insurance company. In this part, you will need to know what is considered as a general duty, what will be considered as additional duties after the uninsured motorist coverage, and what will be the additional duties for the physical damage coverage. The first set of duties are the general duties. It includes to provide prompt notification of the details of the accident or losses to the insurance company. The notification should include details such as how, when, and where the accident happened, as well as the names and address of any injured persons and witnesses. You would also need to cooperate with the insurance company in the investigation, settlement, or defense of any claim or suit because of the subrogation of the insurance company. You also need to submit copies of the notice or legal papers in connection with the accident or loss to the insurance company. You need to agree to submit to a physical examination if requested, and agree to be examined under oath if required by the insurance company. You also need to authorize the insurance company to obtain medical reports and other pertinent records. Finally, you need to submit a proof of loss when it is required by the insurance company. Now, these are the general duties. Besides the general duties, if you have the uninsured motorist coverage, there are two additional duties that you need to do. First, there need to be a promptly notify the police if a hit-and-run driver is involved. And this is very crucial in discouraging the fraudulent claims. So some people actually trip and fall and hurt themselves. However, they want to get it paid by the insurance company. So they notify the insurance company, says it's a hit and run. By notifying the police actually eliminates or minimize the chance of a fraudulent claim, because then you're going to have a police report, and it's going to be a big deal if you have a fraudulent police report. Besides that, you also need to send a copy of the legal papers to the insurance company if the person seeking coverage sues the uninsured motorist. By doing so, it ensures the insurance company has as much information as possible. If you have Part D, there are three additional duties besides the general duties. First, you need to prevent further loss. So for example, if your car breaks down on a highway, you might want to move it to the shoulder to prevent further loss, and also to avoid any other accidents. And if your car breaks down in a city, you might want to lock it before you go out for help. And second, you need to notify the police if a covered vehicle or non-owned vehicle is being stolen, and the person seeking coverage must promptly notify the police of the theft. And of course, not notifying the police would be a very significant indication of an insurance fraud. Finally, you need to permit the insurance company to inspect and appraise. So the person seeking coverage must permit the insurance company to inspect and appraise the damaged property before its repair or disposal. Part F. General provisions. First, the bankruptcy of the insured. So if the insured is sued for an amount larger than the policy limit, and the insured declared bankruptcy in an attempt to escape payment, the insurance company is still required to pay the part of the judgment covered by the insurance. And therefore, the bankruptcy of the insured is not going to relieve the insurance company of any obligations under the policy. What about the change in the policy? During the policy period, certain changes can result in a premium increase or decrease. Those changes include the number and type or use of the vehicle, operators, the owner of the vehicle, the place where it is being primarily garaged, and the coverage period, and the coverage provided, deductible, or limits of liability. There is also a liberation clause. What is a liberation clause? It means that during the policy period, the insurance company decided to broaden the coverage without asking an increase of premium. If that is the case, the change of the policy will be automatically applied to the insured's policy, and the insured does not need to be notified by the insurance company of the broaden of the coverage, as long as it does not include an increase of the premium. A fraudulent claim would not be paid. For example, if you deliberately abandons a covered auto and then reports the car as being stolen, the insurance company would not cover the insured for that claim. Legal actions. You could sue the insurance company, but you could only sue the insurance company until you have fulfilled all the policy terms and comply with them. One prominent example would be if you have failed to pay the premium, you cannot sue the insurance company to cover for your loss. In addition, under the Part A liability coverage, you cannot file any legal action against the insurance company unless the insurance company agrees in writing that the insured has an obligation to pay for the damage, or the amount of the insured's obligation has been finally determined by a judgment after a trial. According to the policy period and territory provision, the accident and losses that occurred only during the policy period will be covered. And where will you be covered? You will be covered in United States. So any state in the United States, you will be covered. So if you are going to Hawaii for a trip and you have a rental car in Hawaii, and it will be covered. And it will be covered in Canada and Puerto Rico because we have very similar traffic rules in those countries. However, it does not apply anywhere outside the policy territory. So if you're driving in Mexico, your own PAP would not cover that. The termination provision tells you how and when can your insurance policy be terminated. It can be terminated if you cancel it, if you do not renew it. It could also be an automatic termination and other termination provisions. So it can be canceled by either the insured or the insurance company. If the insured wish to cancel the policy, he can cancel the policy anytime during the policy period by giving an advance written notice of the date of the cancellation. The policy can also be canceled by the insurance company, depending on what kind of reason for the cancellation. 10 days of notice must be given, if it is due to no payment of premium. And the insurance company will give you longer period, 20 days of notice for other reasons. So basically, if you have elected not to pay the premium, then your time for the cancellation of the policy will be shorter. The insurance company can cancel a policy in force for 60 days or more days for the following three reasons. First, if you have not paid the premium. Second, if your driver's license has been suspended. Or thirdly, if the policy has been obtained by a material misrepresentation. Your insurance company may or may not renew your policy, and there are a variety of reasons why they would not want to renew. One prominent reason would be you're found to have a series of traffic violation, so that insurance company do not want to provide insurance policy to you any longer. So if the insurance company decide not to renew your policy, you must be given at least 20 days notice before the end of the policy period. If your policy period is less than half a year, 6 months, then the insurance company will have the right to non-renew every 6 months, beginning 6 months after the policy's original effective date. If your policy period is greater than 6 months, but shorter than 1 year, then the insurance company will have the right to non-renew at the end of the policy period. If your policy period is greater than 1 year, the insurance company will have the right to non-renew at every anniversary of the policy's original effective date. So for example, after a policy has been ineffective for at least a year, the insurance company may decide to non-renew a policy due to excessive loss amounts. There could also be an automatic termination, depending on the scenario. There could be two scenarios. First, if you do not pay your premium, then it equals to you're not accepting the offer of the renew, and therefore the insurance with your previous insurance company would automatically terminate. And the other scenario would be you obtain another insurance. You switch your insurance company. In this case, your previous coverage will automatically terminate on the effective date of the new insurance. There are 3 additional termination provisions. First, the insurance company may choose to deliver the cancellation notice rather than mailing it. If the policy is canceled, the named insured may be entitled to premium refund, but it is not guaranteed. And a premium refund is not a condition on cancellation. The premium refund is usually pro rata. So for example, if your policy is due to renew every 6 months, and after 3 months in the policy period, you have decided to switch your insurance company, your previous insurance company may refund you with 50% of your premium paid. Finally, the effective date of cancellation stated in the cancellation notice will become the end of the policy period. Sometimes you may have more than one policy to cover one accident. For example, if you're going on a vacation and have a rental car, now obviously your regular personal auto policy would cover their rental car damage. Some people may also have some credit cards that prevent rental cars insurance. In that case, you will have 2 auto policies that apply to the same rental car. In that case, whichever policy has a higher liability limit would apply. And those limits do not stack. So you cannot use both limits. You can only use one of those limits, and you're going to use the highest limit. Sometimes you have some other types of vehicles, and you may not want to have any passenger on those vehicles, such as a motorhome a motorcycle. So for example, if you have a motorcycle and you never have a passenger on your motorcycle, then you can have an optional passenger hazard exclusion to be active as a part of the endorsement, so that you are actually paying lower premium, because you're never going to hurt any passengers since you don't have any passenger on your motorcycle. So a motorcycle owner who never carries a passenger may elect this exclusion. The extended non-owned coverage would help to pay for the vehicles that you don't regularly use, but still want to have it covered. The unendorsed personal auto policy will exclude liability and medical payments coverage for vehicles furnished or made available for the regular use of the named insured and the family members. However, if you do have those cars, you may want to have it covered. For example, if Alice do have a car that is finished and furnished with a company car by her employer, and this endorsement would provide the liability, the medical payments coverage on an excess basis. Some people may have a very high value antique cars or restored show cars. In those cases, they will not drive that car so often as their regular car, so they may only drive those cars every now and then. In those cases, they may not want those cars to be covered under the regular policy that much, so they may want to reduce the value of the car that is covered under the policy, so as an exchange, they can reduce the premium payment. So in those cases, a stated amount of insurance will be shown in that applies to collision loss and other than collision loss. With this type of endorsement, the insurance company, however, will only provide the lowest coverage of the following three. First, the stated amount, that is in the declaration. Second, the actual cash value. Third, the amount necessary to repair or replace. Finally, you may have a snowmobile to use during the winter time. And by definition, the snowmobile is considered to be those vehicles propelled by airplane-type propellers or fins, and those are not going to be snowmobile. For snowmobiles, they do have liability coverage, and the liability coverages are very similar as your personal auto policy. However, they also have certain exclusions. So beyond the regular personal auto policy exclusion, they have the following exclusions as well. First, they cannot be used for any business use. And if you use the snowmobile for any race or speed contest, it will not be covered. Anyone other than the named insured while renting or leasing the snowmobile would not be covered. And if you never have a passenger on the snowmobile, you may want to consider to exclude those coverages for the passengers with the passenger hazard exclusion. So those can be activated to exclude liability for bodily injury in any person while occupying being towed by the snowmobile. Now here concludes the topic 1, personal auto policy. You may now start to review for your exam. In the next chapter, we will move on to talk about the personal homeowners insurance.